Okay. Hi. Apologies. David and I are looking a bit vague this morning, and that's nothing new. Um, as always, we're sort of sorting out the link between Zoom and YouTube, and hopefully we are coming through okay. So we're just going to check a couple of things, and then we'll start and we'll see what's going on in the wonderful world of Forex and crypto this morning. I have checked and it looks like we are actually working. So let's start. I think we'll start by sharing my screen, and what I want to look at today is really a follow through from the last live stream, and that is looking at support and resistance, which is a key plank of volume price analysis in the last live stream, which is up on this channel, and you can go and check it out if you want to. David and I looked at different aspects of volume price analysis, anomalies, and some questions. And if you have any questions, please just put them into the chat box, and we will be more than happy to answer them. One of the points that I made the last time we were here was the importance of understanding and marking on your charts the key support and resistance levels on the slower time frames, because when they then appear on the faster time frames, they take on an additional significance and can also uh, be the reason why you may see a reversal of the primary trend that you may have on a slower time frame. I had a really nice example yesterday with the Aussie yen, but in fact, we've got perhaps an even better example with the pound yen today. And this is the daily chart. It's I haven't marked it. I haven't got too many levels on here, but the levels I do have. First of all, I have this one here, which is from the 8th of July of last year. You can see we've got a very nice shooting star. We can see the three, prior to that, we've got three up candles and a kind of falling away of the volume. So that alone would tell us that possibly we were coming to at least some kind of pause point. And in fact, on the 8th of July, it posted as a very classic shooting star, and the resulting downtrend, which was volatile as well, very big, wide-ranging candles, wonderful trading opportunities, unlike the markets that have been at the moment, volatile, falling fast. I think going back to last year, if I remember rightly, it was more than likely the Bank of Japan and worries about the carry trade, and then this sort of downtrend ended with another very classic candle, which was this big hammer candle on big volume. We didn't get a V-shaped rally off that. It it obviously, I would say that was a lot of stopping volume coming in. It certainly was enough to push the price higher, and then we had some consolidation, and you can see the difference in the pace of the move higher compared with this one. It kind of drifted up higher, but then it started to create this level here. I put this level in about, I think when the price was around here. I looked over, as I explained, I do these manually, I do these by eye. I don't have a specialist indicator, although we do have indicators as part of the quantum trading software tools, which will draw the lines in for you. We have what's called the accumulation and distribution indicator, which is an indicator that I can put on my chart on the faster time frames, whereby it not only puts the lines in for you, In other words, the number of times price has tested a particular level, but each time it tests it and doesn't break through, the line on the accumulation and distribution indicator actually gets thicker. So it gives us an idea of the relative strength of that zone, if you like. And I put, so you can see here, looking back, it was tested there, it came off, and then it actually broke through. And obviously here, uh, in the at the beginning of this downtrend following the shooting star, you can see the level. It did attempt to go through, but it didn't manage it and came back. And we have test here, again. So we can see it is an important level. It's a strong level. Didn't quite make it here. Doesn't always get back to this level, but in the last 3 days, it has. It came up to it on. I'm looking at the weekly chart. What am I talking about? Look at the weekly chart. It came here. It came off, and this is where we are at the moment. Apologies. It's the same on the daily chart. Let's have a look. It's the same principle that we have here. Now we can see it on the daily chart in more detail. Here we are. I can scrunch it back here, and we can see here the number of times it's been tested. The 200 MA, I have the 200 MA on, and the reason I have the 200 MA on is it's I call it a psychological level. The market pays such an enormous amount of attention to it, particularly in stocks, in the indices, and also in the Forex market. And you say, well, how do you know it pays attention to it? Well, you only have to look at the price action, what happens to the price action around this level. And it is particularly significant on the Aussie yen. I'll go over to the Aussie yen in when we've had a look at this chart. At the moment, it's way above the 200. So in classic technical analysis, price is above the 200. It's considered to be bullish, and as we saw on the weekly chart, the pound yen is in an uptrend now. It's met this resistance here, and we can see here it came off. That we have a lot of volume going in, narrowing spreads. What's happened? We do get a reversal. We get a reversal here. We get a reversal. The same amount of volume on that candle as on that candle. So that what does that tell us? Well, that's an anomaly. So that possibly tells us that this isn't going to go very far. And it then continues higher and hits this level again. Now, I actually have two levels on here, as you can see. This little, between these two, if you like, railway tracks. And when the price hits two levels that are relatively close together, we can expect a degree of consolidation. Now, what that means that if you are on the faster charts is how is it going to impact the price action on the faster charts, given that we have these two strong levels on the slower charts? It's going to impact it that you may get more whipsawing. You're probably not going to stay in there very long because you're trying to trade a trend that is of something that is in a quite a tight congestion on a slower time frame. Now, then you have to make the decision. You can say, well, actually, these two levels are so important as I said, on the daily and obviously on the weekly chart. Am I even going to try and attempt it on the faster time frame? That decision is very much up to you. You're the only one that can make that decision. But what it gives you is an indication of what you can expect on the faster timeframes. And let's be honest, most Forex traders are on the faster timeframes. They're looking for a trading opportunity, whether it's long or short. This is a market of mean reversion. You don't really care if it's going to be long or short, but it gives you that all-important insight on what you can expect, as I said, on the faster timeframes. So we know we are within this channel, if you like, between these two lines on the slower timeframes, still within, if you like, a generally bullish bias. It has a bullish bias. It's still looking to go to the upside. And the other thing to bear in mind is that when it reaches one of these strong levels on the slower time frames, it also tells you that there is a good probability that you will be able to take a trade to the downside, because often one of the things you'll hear is, oh, should you ever counter, trade to the counter of the trend? And there is no straight answer to that. I said, well, it depends. It depends. Are we simply going to see a secondary trend, or is this going to turn out to be a reversal? Now, at this point, we can't tell. All we know is that these two levels are very important. They've come into play. The range on the day is not terribly, not terribly exciting, not terribly wide. So, however many pips that you can take, not going to be that many. It's not a day like we had here. It's not even a day like we had here or had here. They are getting narrower, and when markets are bullish and they are climbing higher and the spreads begin to narrow and the volume kind of stays the same, that's another signal that we need. It's a kind of pay attention signal, because it's really, perhaps it's beginning to struggle as it moves higher. But if we move down to, as I said, to the faster time frames, and also before I go into the very fast time frames, I just want to have a look at the hourly chart and introduce you to what we call our Camarilla indicator. I mentioned earlier, these yellow lines I have put in manually. These lines here is also a yellow line, which you can see marked R between R1 and R6. This is from the indicator itself. The most important levels in this indicator in terms of potential reversal and pauses are the 3 and the 4. And the key thing about the Camarilla on the hourly chart is that these levels are calculated and on a weekly basis. So they stay on the chart for the whole week. So if you don't want to trade very fast time frames, you want to maybe perhaps to stay in a trade maybe for a day or so, slightly longer, then certainly having an indicator like this will help you, because it does the work for you in terms of these weekly levels. And you only have to, once you have the indicator and you put it on the chart, you can simply, by observation, look back and see the number of times the price actually stopped at the 4 or the 3. And when it then combines, or very close to, one of the manual levels that we have, as I said, on the daily chart, it's like a double confirmation. You get what I call a confluence of technical signals. Now, at the moment, these are the two levels that I've highlighted on the daily. Bang, not quite in the middle. You've got the R4. You can see here it tried to get through, paused, this is from, as you see, from Monday. This has been here since Monday, and it's been not quite oscillating, but it's tried to break higher from the R4. And what is it? It's run straight into this level that I've taken off the daily. Again here, back to the R4. It provides support and it provides resistance. And what do we have here? We have, again, this is last night. This is at 10 o'clock. This is rollover. So the volume is always going to be, it's in the context of the market, as I said, rolling over. So, but it did actually manage to get through. And then we get a really nice example of just classic VPA. The price moves higher, the volume on the up candles is falling. You have a tiny compressed candle here, then you have this candle, and you have the volume even less than it is too. So it's kind of telling you that this little rally is probably running out of steam. And this is where the indicators such as the Camarilla, now this is the 5th level, not as I said, not as possibly significant as the 4th and the 3rd, but still comes into play. and that's where it came back below this level. And where do we go to? Back here. And it's this constant oscillation. And don't forget, this is the hourly chart. So if you are on the 5 minute chart and you are maybe taking a trade to the upside, and it stalls and it stops, it hasn't quite got to that level that we saw on the daily. Have a look at something like the hourly chart. That's your kind of intermediate. If you don't have the Camarilla, you can certainly put this in by eye. But having the Camarilla and understanding how the Camarilla works, certainly with the third and the fourth level, will give you an awful lot of confidence. And where we are at the moment with the pound yen, it's kind of drifting again. It's got this drift higher, but at the moment it's a bit of a sideways. There's quite a lot of volume going in. And the other thing to look at with candles, where are the wicks? Do we have them predominantly to the upside? Do we have them predominantly to the downside? And we see we've got this effort to rise, effort to rise. And what we can do is we can go and have a look at even say something like the 5 minute chart, as we know it's kind of going sideways. In fact, I've got the 2 minute chart here. Let's have a look. Just put that on. There we are. Right. And very different levels from the Camarilla. I just happen to have them here because these levels are recalculated on a daily basis. So we have different levels, different levels of importance from all the way from the daily right down to the hour, and now we're on the minute chart. And you know what I said about the third, number 3, as we can see here, it keeps bouncing, keeps trying to rise, and it keeps coming back. Now it's coming back to test this level. And if you remember the candle on the hourly chart, they had wicks to the tops of the candle. So if there is going to be a reversal, then it will certainly, if it breaks through the third, we could possibly get a little downtrade, even though it is counter to, as I said, the kind of the bullish bias that the daily chart has. And again, these the daily levels are here between, so it's within, it's a reasonable, it's a good range for taking a trade on the faster time frames. So that's a little explanation of how you consider important levels in different time frames and how they can impact, first of all, maybe what you can expect on moving forward in the session that you're trading, and actually seeing it play out as the price action is unfolding. I mean, generally speaking, the market is, there's not a lot of volatility. I looked at the VIX, it's down to 16. It's got a sort of, it's very suppressed. And what does that tell you? Markets may be becoming complacent again. Now, at some point, they don't stay complacent forever. So we have to be, markets are always dangerous, but they're possibly more dangerous when they are complacent, because something will trigger and you will get a huge burst of volatility. I also said we have this indicator called the accumulation and distribution. So if I take the Camarilla off, and I will put the accumulation and distribution on, and this is what I mean. And this, in fact, confirms the fact that we are just moving sideways, touching different levels. These lines just get thicker and thicker, and the thicker they become, the stronger this level is, and the more, so when the price approaches it, then you're going to need more and more volume of fuel to actually push it higher. So even if you're faced with with the day, maybe the pound yen is your favorite pair to trade, and you look at it and you think, oh my goodness, what is happening? Go and have a look at all the time frames, do an analysis of the daily, put in some levels, and that will often explain to you, or give you a reason why the price action is doing what it is at the moment. I mentioned in the last session that we were together, those of you who know us, all our indicators are available from quantum trading, quantumtrading.com. All these tools are there. We will be putting together a little package some new indicators, some existing ones, which we actually call the VPA package. It's not up there at the moment. It will be very soon. But if you are interested and you want to know when it's available, just drop me an email, anna@annacooling.com, and I will let you know.
Hi everyone, good morning from us, good afternoon, good evening, wherever you are in the world. Lovely to have you with us for these short sessions, which we will be doing regularly on the channel. So do keep an eye out, probably a couple of weeks, maybe more than that. We'll see how we get on. But we started, we had an enforced break. That's why we've been away for a few months, but that was for health reasons. But we are now fully restored and back to full time. Now, let me just share my screen because what I want to do, I'm just looking over here. Right, let's show. We're going to look at, very quickly, I'm going to look at cryptocurrencies today. But before I do that, let me just click on that screen there, which hopefully is coming up. I should be able to see that. Can you see that? Yeah, fine, good. There we go. Okay, perfect. The reason I've started here with the currency strength indicator is really just to remind you of some very simple principles, because what I'm going to do is I'm going to flip to cryptocurrencies, and we have the sister indicator to this indicator. This is called the CSI, which is the currency strength indicator, obviously. And the sister indicator is the CCSI, in other words, the cryptocurrency strength indicator, which I'll pull up in a moment. But really, I just wanted to reinforce the principles of how we use these indicators, because what they are is a window on the world of the instruments that we're looking at, and they will give you a shortcut as to which instrument, which in this case, which currency, and therefore which currency pairs to consider, and which ones to ignore and look at a future date. And this is a very fast time frame. I have a 1 minute, a 3 minute, a 5 minute. And what the indicator displays very simply in all time frames, it doesn't matter whether it's a daily chart or a 1 minute chart, or even you can go sub 1 minute, because on TradingView we have 15 second and 30 second and so on and so forth, which is why the platform is so powerful. It's wonderful. We have this wonderful array of time frames, from literally sub 1 minute, where I spend a lot of my time scalping, right the way through to the dailies, the weeklies, and the monthlies. So in terms of the indicator, the principles are very simple. In terms of currencies, what we're looking at is we're looking for those which are overbought. And in this case, we can see we've got the New Zealand, the grey line, and we've got the Aussie dollar. This is on 5 minutes. So those two currencies are in a potential area where they can be considered to be in this time horizon, and obviously below that, of being in an overbought position. In other words, they are more than likely, and they will at some point revert to oversold. In other words, they will move from the top down to the bottom, because the currency market is one which can be considered to be almost pure in the sense of mean reversion. And by that I mean currencies continually oscillate from overbought to oversold and back again. They cannot remain in one state forever, and they certainly don't go to zero. And that is what makes the Forex world unique. It also makes it the most interesting. And also, if you are a reversal trader, whether you're a trend trader, swing trader, reversal trader, whatever it may be, this is the perfect place to trade, because you can be guaranteed you will get reversals in all time frames, and they are very clearly denoted on the currency strength indicator. So that is certainly one of the areas we look at. We look at the top and we look at the bottom. Now, at the moment, we've got nothing which is very strongly oversold. They're all oscillating around here in the sort of mid region, very messy, not really going anywhere. And that in itself is also important, because it gives you a sense of which currencies are just moving sideways. Because if they're moving sideways on the CSI, I can guarantee you they'll be moving sideways in the real world of price action. and therefore really nothing to look at when they are in this sort of messy, moving sideways region where there is no strong trend. Because what we want to see for a strong trend is a sharply inclining line or a sharply declining line. Now, the only ones that are declining strongly on the 5 minute time frame and getting down to potentially an oversold position, Canadian dollar here, you can see the strength in that fall and equally the strength in that rise. So if you were looking at the New Zealand CAD or the Aussie CAD, for example, both of those would have performed very nicely over the last few hours because you have one which is rising strongly and another which is falling strongly. So those are the principles. It's looking at overbought and oversold. It's looking at the steepness or the gradient of the lines to pick off and create a pair which is going to have some strength in the trend. And equally, where you have currencies which are moving in the same direction, for example, we have, let's say, the Aussie dollar, I beg your pardon, the US dollar, which is the red line. That was moving pretty much in lockstep with this yellow line, which is pound. So in terms of cable on this time frame, there wouldn't be a great trend. Now, those principles can be overlain on the exact same indicator, which is this one, which is the CCSI, which is the cryptocurrency strength indicator. So the principles are exactly the same. We have overbought up here, we have oversold down here. Now, the only difference within the crypto world as opposed to the currency world is that our primary focus is on this one, which is the red line, which is the currency denoted by Tether, because ultimately all cryptocurrency pairs are quoted against the dollar, which is in effect Tether. Now, generally speaking, and this is the big difference, generally speaking, cryptocurrencies will tend to move in the same direction en masse. Not always. As you can see here, we've got Ethereum, we've got Bitcoin down here. They are moving in pretty much the same way as is Doge here. But these ones up here are not following that pattern. They're actually moving in the opposite direction. And funnily enough, they're moving in the same direction as Tether. So in terms of trades, and I'm talking intraday trades here, faster trades, there wouldn't be a great deal to do on those at the moment. And again, in exactly the same way as we saw on the currency strength indicator, we are looking for those cryptocurrencies which are moving in divergence to Tether, which is our counter currency, in other words, the opposite side of the trade. And it's other than that, exactly the same principles. We're looking for overbought and oversold, and we're looking for lines which are strongly rising, lines which are strongly falling, and those are the principles we apply, and then we go and look at that particular cryptocurrency. Now, the beauty, and this is a major difference on the cryptocurrency pair, with the currency strength indicator, you have the 8 currencies, but with the cryptocurrency, we have the option to go and select whichever one we choose. So if we go into settings, you'll see here, these are the ones I have at the moment, but if I click on this, these are all the other cryptocurrency pairs, of which there are a huge number, which you can trade and certainly apply to the cryptocurrency strength indicator. So you're not limited. There is absolutely no restriction on which cryptocurrency you choose to have on your cryptocurrency strength indicator. You just go into settings up here, you click on the drop down, and if you wanted to change it, you change it to one of these, you put dash on, and you click OK, and then dash will appear on your time frame. So that's the cryptocurrency strength indicator, which is wonderful because what it does, it gives you a window on the world of cryptocurrencies. It guides you to those cryptocurrencies in your chosen time frame. I've got 3 here. I've got 1, 3, and 5. You can have as many or as few as you like. It will work on all time frames. It works in real time, so it's pulling in the data live, updating live. As I say, it doesn't matter whether you're on a 1 minute or a 1 month. It will work in exactly the same way, and the principles are identical. Now, what's interesting is if we go over onto the, I've done that, yeah. If we go over onto the array here, the workspace, I've got 1 minute, 2 minute, 3 minute, I've got the 5 minute, I've got the 15 minute, and I've got the hourly chart down at the bottom. And it's the hourly one I'm going to focus on. But also, before I do that, what I wanted to just highlight really is the fact two things. First of all, our indicators work in exactly the same way on these charts as they would on any other, whether it's a future, whether it's a currency pair, whether it's a stock, it really doesn't matter. We go onto this 1 minute chart, we pull it up. I've just got the volatility indicator on here. But the other point about this also is that we can apply precisely the same lessons from a volume price analysis perspective on cryptocurrencies as we would on any other instrument. And you can see it very clearly here where my cursor is. The price has been coming down. We had this big spike in volume, very narrow spread candle. What does that tell you? It tells you you've got some buying coming in there. The volume drops away to nothing, which is also confirming that view. And then up we go from, where are we? This price here, 77, we went all the way up to 261. So whilst it looks a small move, it's actually a big move in price. And in addition to that, we then apply volume price analysis at a second level, where we're looking at the spreads, where we get narrowing spreads in an uptrend. What is going on? Well, the strength of that trend is weakening clearly because momentum is draining away. It's also confirmed by the fact that we've got volume here, which is driven in, wick to the upper body, doji candle, it's going to roll over, which it does. Now, what's interesting about that move is we had falling volume, falling price. What is the implication? Not going to go very far. Very simple VPA analysis. Now, what I really wanted to show you was the hourly chart here. Because if you are trading, this is Bitcoin, but this applies equally to all the others as well. If you're trading Bitcoin and wondering why it is trading in a narrow range, then this hourly chart answers that question absolutely clearly for you. Because what we saw following the breakout through this ceiling of resistance down at 109.5, an absolute monster amount of volume came in at 8 o'clock. We had a volatility candle which confirms this ton of volume, and this is equivalent to the market makers moving into a stock or the market makers moving into a currency pair. It's exactly the same principle. When we see a ton of volume like this, it can only mean one thing, and that means in this case it's the big whales operating en masse. They've moved in. We get a volatility trigger. What do we expect on the outcome from the volatility trigger? One of two things. We're either going to see congestion or we're going to see a full-blown reversal in trend. In other words, from an uptrend to a downtrend. This is what we classify as the master candle. We've now got an additional volatility candle to the downside, but the important thing, it's trading within the spread of that candle. And from a trading perspective, whether we're on a 1 minute time frame or an hourly chart as we are here, what we do, a very simple rule, we draw a line up here which coincides with the R4 of the Camarilla, which is also very interesting, as Anna explained. These levels are absolutely key. R3 and R4, two of the most important. It hit the R4 and came off, and the lower level down here below R1. Those are the two areas where we would have our levels, and we would not be trading on this hourly time frame until we'd moved outside that range of that candle. Why? Because at that point, you can then assume that the volatility from that event has subsided and been accumulated, absorbed, if you will, into the general price action. And we can then say we are now moving on into more normalized price action outside of this volatility candle. And that is a very simple rule. We just set a level there, we set a level here. So I won't be looking to trade this, certainly on this time frame at any rate, until the price has broken out through 112,237 or to the downside below 109, 546, 543, whatever. It's a very, very simple rule. It's a very powerful indicator. It will keep you out of an awful lot of trouble. And the reason it will is this. You might wonder why volatility is so important. And it is important because it is the single mechanism that the market makers, the insiders, the big operators, call them what you like, use to trap you into weak positions. It's as simple as that. Why? Because they understand that you are an emotional being, you are an emotional trader. And I can assure you, if this was on a 1 minute chart or a 5 minute chart, your response, your immediate emotional response will be to jump in and join what you thought would be a nice, easy trade, nice place to make some quick bucks, because you have been sat through a huge congestion phase, waiting to trade, and then suddenly, snap, the market jumps to the upside, you jump in, and now you're trapped. And the probability is you get stopped out anyway, or you sit through an enormous amount of congestion here, which is painful and tedious, not knowing whether you're going to get out of this as a profit, break even, loss, or whatever. That is the mechanism that they use. You might shout foul, you might say it's not fair. Well, if that's the case, then don't play this game, because this game, and it is a game, it's a serious game, but we have to load the dice in our favor and not and have tools and instruments which give us the opportunity to see what is going on the inside of the market. And that's what volume price analysis does. It tells you exactly what is going on in real time and allows you to follow the big money, the insiders, the market makers, as they move in and out of the market. And as I say, this whole business of volatility is absolutely key. It's why we developed the indicator in the first place. And you will see it in all time frames. And the beauty of it also, just click onto the 2 minute for a moment. The beauty of it also is that it triggers in real time. What do I mean by that? It means that once the metric of average true range, excuse me, because that is what it's looking at, is met, then these little purple arrows will appear. Now, on a fast time frame like this, on a 1 minute, 2 minute, you might think, well, that's not terribly important. But I can assure you, on an hourly chart or a 5 minute chart or a 15 minute chart or a daily chart, it is hugely significant, because they will appear before the candle has closed. So you don't have to wait. You'll get the signal straight away. It's immensely valuable. Another one over here, nice move to the downside. They didn't participate in that one. And that's a trap move, which you'll see all the time. The volume falls away dramatically and then it snaps to the upside. No great surprise to see that. So there we go. I really just wanted to show you that all the principles that we talk about in these sessions, whether we're talking about currencies, whether we're talking about futures, whether we're talking about stocks, whether we're talking about whatever, cryptocurrencies, the principles are the same. Volume price analysis works in exactly the same way. And in addition to that, the indicators can be incorporated onto all these timeframes and all these platforms. So I'm going to leave it there. We've been going for 38, 40 minutes, which is roughly what we're going to do on all these sessions. And thank you for joining us. And we will be back soon with another of these where we'll look at other aspects and bring all the indicators in as well. As Anna said, you can find all the indicators over at quantumtrading.com. If you are familiar with volume price analysis, then you may have read one of Anna's books. You'll also find a lot more up there, particularly for examples of VPA. I know a lot of you find the concepts difficult to get on board. And I would recommend two things. First of all, the examples books on Amazon. You've got a 200 worked example book on stocks. You've got 100 worked examples on Forex, and there is also a cryptocurrency book up there as well. The second thing I'd also urge you to do is to get a platform like TradingView and go down onto the faster time frames, not necessarily sub 1 minute, but certainly on 1 minute and above, and start practicing, because that's how we started. We started with bare paper charts, which we covered up and we then unfurled, because in those days, back in 30 years ago, there was no internet and we didn't have the luxury of what we have nowadays, which makes life very, very, very simple. So there we go. Thank you so much. You can also find, if you want to take a deep dive into VPA, you'll also find the education programs over on quantumtradingeducation.com for both stocks and also Forex. And who knows, one day we may also include one for cryptocurrencies, but the principles, as I say, are identical. And finally, Anna and I do offer one-on-one coaching, and you can find all the details over on her homepage at annacooling.com. So thanks for coming along today. We're going to stop there. I'm going to stop sharing.